Welcome to Asian Economy Channel. I'm Antony. During a recent hearing, senior U.S. Senator Lindsey Graham acknowledged that Iran's oil revenues have been increasing in recent months, indicating the ineffectiveness of unilateral sanctions imposed by the U.S. on Iran. Graham criticized the U.S. government for failing to prevent Iran's oil exports and highlighted China as the main reason for the sanctions' ineffectiveness. He argued that breaking the monopoly of the U.S. dollar and petrodollar is fair and reasonable in terms of global economic and trade. Iran has been under comprehensive sanctions, but its oil revenues increased significantly last month, primarily due to China's involvement. The petrodollar system has posed challenges for oil-producing countries, with frequent sanctions and restrictions. Iran has been actively working to replace the U.S. dollar with the Chinese renminbi, RMB, as a major reserve currency since 2018. Currently, more than 25% of Iran's foreign exchange reserves are held in RMB. Over the past 3 years, approximately 31 million tons of Iranian oil have been gradually shipped to the Chinese market, with transactions primarily conducted in RMB. The U.S. sanctions on Iran have also created difficulties for Iraq's energy and trade environment. 1/3 of Iraq's electricity and natural gas supplies rely on Iran, and the U.S. has been pressuring Iraq to prevent energy cooperation with Iran. However, Iraq recently signed an agreement with Iran to expand their energy ties, signaling its intention to become more independent from the U.S. and the West in financial dealings. Increasing signs indicate that the U.S. is losing its influence over oil-producing countries in the Middle East. The reconciliation between Iran and Saudi Arabia, as well as Syria's return to the Arab League after 12 years, highlights the weakening of U.S. influence in the region. Saudi Arabia and other Middle Eastern oil-producing countries have been accumulating gold reserves and exploring non-dollar currency transactions, indicating their intent to move away from the petrodollar system. The U.S. dollar's dominance as the global reserve currency is waning, as more countries realize the unreliability of the dollar and engage in economic and trade activities outside the dollar-dominated monetary system. Several oil-producing countries in Africa, including Nigeria, Angola, and Algeria, have followed Iran, Russia, and Iraq in de-dollarizing and conducting non-dollar currency transactions, including the RMB in oil trading. Saudi Arabia, in particular, has expressed openness to selling oil in currencies other than the US dollar and has started accepting non-dollar currencies, such as Kenya's shilling, for purchasing Saudi oil. The accumulation of gold reserves and net sales of U.S. Treasury bonds by Saudi Arabia and other Middle Eastern countries further indicate their potential abandonment of the petrodollar. Renowned investor Jim Rogers believes that the era of the U.S. dollar is coming to an end, and the Chinese renminbi has the potential to replace it as the most commonly used currency for international settlements. As of May 19th, at least 112 countries have started various degrees of de-dollarization, distancing themselves from the dollar. China's RMB is spreading to other markets worldwide, and more countries are joining the RMB settlement system to reduce their exposure to the dollar. The emergence of RMB crude oil futures in 2018 has made it one of the top 3 global crude oil futures alongside Brent and WTI. This has provided a new option and potential for a new reserve currency in the future. Overall, the status of the US dollar and the petrodollar is undergoing a substantial decline, while the Chinese renminbi continues to gain influence in global economic and trade activities. Furthermore, this shift in global economic dynamics has prompted several countries to take practical steps to distance themselves from the US dollar. One notable example is the increasing acceptance of the Chinese renminbi as a settlement currency for international transactions. For instance, Russian merchants have stopped accepting Indian rupees for oil transactions, and there are indications that Indian buyers may start accepting the renminbi for significant purchases of Russian oil. Additionally, the proportion of renminbi settlements in Russian imports has soared from 4% to 23% in 2022, highlighting the growing role of the renminbi in trade with Russia. This trend extends beyond Russia, as more countries join the renminbi settlement system to reduce their reliance on the dollar. The long-term trajectory suggests that this development will continue for the next several years, potentially even decades. Former Bank of England Governor Mark Carney has noted that the emergence of renminbi crude oil futures in 2018 has provided a new option for international settlements. It has already become one of the top 3 global crude oil futures, on par with Brent and WTI, and has the potential to contribute to the emergence of a new reserve currency in the future. The status of the US dollar and the petrodollar is also impacted by concerns about US policies and a decline in global confidence in the United States. The lack of neutrality displayed by the White House has eroded the long-standing perception of the dollar as a reliable global reserve currency. As a result, more countries are seeking alternatives and diversifying their reserves away from the dollar. Thanks for watching. I hope you enjoy the video and analytics from me. Like and subscribe, PLS.